All right, we're recording. We're live. What's up, everyone? What's up, party people? It's Sunny Ray, your host for Building on Bitcoin. Today, I'm joined by a really special guest, a guy by the name of Alex Tapscott. Alex, how are you, my friend?
I'm well. How are you, Sunny?
I am very, very well. Um, I'm trying to remember when was the first time we had crossed paths?
I would say
17?
2000 and no, I'd say earlier than that. 2000 and maybe 15,
Wow.
16.
Okay, okay. We go back long. I remember I was in.
I met you through a common friend, Joe Weinberg. You remember Joe?
Do I ever? I just
Not
chatted
like
with him this
he's still
weekend.
with us.
Yeah, he
Um,
had I don't know if you heard, but he had a bit of a car accident recently. He's recovering. Yeah, but no, he's living in Dubai, living the good life. Cool. Okay, so as I was mentioning in the kind of the pre-interview is that I have like three sections. We're gonna obviously talk about your book, Web3, which is it just makes me so proud every time I walk into Indigo with my kids and I see your book like right there, in the bestseller list, and I'm just like, I know that guy, I know that guy. So, and then the work you've done in the space, obviously, quite remarkable. Um, we're going to talk about your Bitcoin story as well, but I just kind of love to do a bit of a deep dive on people's pre-Bitcoin kind of history, right? So
yeah.
what did your life look like before you got into Bitcoin? You can take the short, medium, long version. But yeah, but where are you from? Maybe share a little bit about maybe something that you haven't shared with the rest of the world.
Sure. I think I'm a pretty open book, so I don't know if you'll get any fresh tidbits. But basically, I was born in Toronto, Canada. Lived here my whole life. Went to university in the United States. I was an athlete. I played football and rugby there, and came back to Toronto to take a job in 2008 in the world of investment banking. Now, those of you who are listening to this who are old enough will remember that 2008 was a bit of a difficult year for the financial services industry, to put it mildly. It was the year of the great financial crisis. So, the month that I graduated from university, Bear Stearns went under and had to be rescued by JP Morgan. And the second week on the job in September of 2008, Lehman Brothers went bankrupt. So, here I was a political science and philosophy major in undergrad. I wrote a 150-page thesis about how law and political systems react to emergencies like terrorist attacks. Because, Sonny, you and I grew up in the aftermath of 9/11, but I didn't really know much about financial services. My dad used to joke that I didn't know the difference. I didn't know my an asset from a hole in the ground. um, and and I remember when all this stuff was happening, I actually, frankly, was like, I think a lot of people, kind of overwhelmed by it. And I didn't really understand it all that well because I was new to the industry. So within a couple of weeks or months from starting my job, my firm had to trim its headcount. Now we did a lot better than a lot of others. A lot of Canadian and broker dealers and banks fared far better than their American counterparts that went under or had to be rescued by the government. But still, I remember we had to take our headcount down by like 15 or 20%, and I did not get fired. And I remember going into my boss's office and I said, I just want to let you know I haven't done a lot to prove myself. I'm not really adding a lot of value so far. I was 22 years old. But I'm just grateful that you see some potential here and you kept me around. And he looked at me like, are you serious right now? He's like, I spend more money on paper clips than I spend on you. You're not worth it to me to fire you. No. He says, now get the hell out of my office and keep your head down for the next 6 months. That's what he said. So that was
Funny.
like my start to the world of high finance. Anyway, so the crisis passed, obviously, and the Canadian market rebounded really quickly because there was this huge stimulus in China and a big economic rebound that led to a bonanza for precious metals and for other commodities. And Canada is a country that has a huge export industry. So we were doing great from 2009 and well up in 2011, 2012. And that's where I really started to sort of cut my teeth. So I started in equity research, but I moved into sales. And so basically, my job was to help large companies raise significant amounts of money from institutional investors. So we would take these companies down to New York, Boston, and in Toronto, which is where most of my client base was. and introduce them to potential investors and hope that those investors would cut a check basically. And we did a lot of deals, billions of dollars a year in transactions. So I was doing this job, I was loving it. It was an amazing sort of first job, but I was doing it for a few years, and that's when I first learned about Bitcoin. So this is fast forward, I think, to 2013, I think.
And before we get into your Bitcoin story, right, I want to kind
Yeah,
of spend a little bit more time here. You brought up your dad. I'm not gonna lie, that book that he wrote called Wickonomics way
yeah,
back in the day was I attribute my own orange pilling, a large part of it to that book. I honestly believe that if I hadn't read that book that Don had written, I don't think I would have been as open to it. But then you later on went on to, I think, co-author a book called Blockchain Revolution that did really well. How many did you
yeah.
say copies did sold in India? Was it like
In
many?
India, many
Many.
copies. I don't know. We don't know the exact tally. Our
Yeah.
publisher says that it's sold more copies than any other book on the topic. It has
Yeah.
been translated into, I think, 21 languages, which when you think about how many languages there are in the world, like that's a lot.
Unbelievable.
English,
Of
simplified
course.
Chinese, traditional Chinese, Japanese, Korean, Thai. It's like you kind of keep going all the way down to 21. I think we have a Mongolian translation, um, which is like my favorite. It's there's no Mongolian publishing industry, so that was published, I think, by the Mongolian government, and they did the translation. So I don't know what's in the Mongolian version. I,
That is just insane.
I
Yeah.
haven't had a Mongolian friend check the text yet, but that came a little bit later, Sonny.
Yeah.
So 2013, but I will talk about the relationship with my dad and how we collaborate. So 2013, I learned about Bitcoin. Like I was working on a sales and trading desk, and so
Hmm.
this thing comes along, people are using it. It starts to like clients start talking about it. There's always like a kind of a young client, kind of cutting edge, saying, "Have you heard about Bitcoin?" Then you learn about it, and then you look into it. And I remember my first conversation about it with our head trader. And he's like, "Should we buy some of this stuff?" And I'm like, "I don't know. Should we buy some of this stuff?" And then we decided not to buy some of this stuff. And then, but I kept sort of like looking into it and becoming more interested in it. And it was actually on a ski trip with my dad in January of 2014. I remember this very clearly, that I really started to spend more of my time focusing on it. So we were in Mont Tremblant, Quebec, and father-son ski trip. We were having this big tomahawk steak, big bottle of red wine, and he asked me, like, what are you working on these days, Alex? Like, I know you're doing a lot of these different deals. Like, what's kind of come across your desk that's really interesting? And I said, well, actually, I've learned recently about this thing called Bitcoin. I'm sure you've heard about it. By then, it was sort of part of the vernacular. And at that stage, there were actually some companies who had started to come through our office, Sunny, mostly miners, who were looking to our firm to raise capital for them, potentially in the public markets. Now, this was very, very early, but the company that I worked for at the time ended up being actually the largest underwriter in Canada and I think in the United States of new equity issuances for crypto miners and crypto companies. The firm's called Canaccord Genuity. So, like, no one else in our firm at the time, this is way back in the day, had any knowledge about Bitcoin. So I kind of became this guy that they would bring into meetings, be like, Alex kind of interested in this thing. Like, he can talk about it. And like, I didn't know anything. All I'd done is like read the white paper and had a few conversations and looked into it. But by just showing any interest, I'd become like the expert in the firm on this topic. So back to Tremblant with my dad, and he said, that's interesting that you're looking into Bitcoin and that you're starting to see some deals in the space, because I'm actually looking at Bitcoin myself. And I was like, really? And Sonny, you pointed out, my dad is someone who's a prolific author, someone who has written extensively about the impact of technology on business, on society, on culture, on government, dating all the way back to 1980, which is when his first book came out. He wrote the first best-selling book about the internet called The Digital Economy, the first bestseller about social media and mass collaboration and Web 2 called Wickonomics. And so like Web 1, Web 2. And so he was unsurprisingly looking at this sort of next big thing, right? So it's not like he was an accountant or something and started to look at Bitcoin. And he said, he said, I'd love someone to come and sort of dig into it for this project that I'm running at the University of Toronto called the Global Solution Networks Problem. but nobody on our faculty has any, knowledge about Bitcoin because it was such a new topic. And also, nobody has any sort of practical financial services, market experience. So he said, so would you be interested in coming on board, part-time and maybe digging into this and writing a research report? So I was at an interesting stage in my career. I just finished this thing called the CFA, which is, this like kind of gauntlet that a lot of young bankers go through in their 20s. Hopefully they get it over with in their 20s. And I passed all 3 levels, and I had my charter. I was a director in the bank at a young age. I had a great client list. Things were going well, but I had a little bit of spare time to like pursue some outside interests. And so I said, sure. So I took on this task of writing a report. I hadn't written anything longer than an email in like 10 years, but decided to take this on. And it was very difficult at the time because I had to relearn how to write and think and, do analysis and stuff like that. But it was really rewarding. And that paper was called the Bitcoin Governance Network. And basically, the Bitcoin Governance Network paper's thesis was this is more than just a new asset class. This isn't just some form of, some speculative thing that people are buying and selling and trying to make money on. This is a new technology paradigm that Bitcoin was ushering in a second era of the internet. That for decades we'd had an internet of information that transformed how we move and share and access content, how we communicate online. And that had a profound impact on many industries. But the way we move and store and manage money and assets and value hadn't changed that much, even though the internet had been so profoundly impactful. And that's because when you use the internet to send something, you're not sending an original, unique thing. You're sending a copy, a version, right? So if I send you an email, I can send the same email to someone else, which is great if it's an email. But if I'm sending you money, it's important that you have the only version. So Bitcoin was the first technology that actually addressed and solved this issue. And this is a now famous thing known as the double spend problem. How do you ensure that when you send something of value from one person to another, that you don't leave behind a copy, that there isn't a trail of breadcrumbs? How do you decentralize trust from an intermediary, which is the kind of institution we used to rely on, to a network state? And Bitcoin solved this. And what was most remarkable about Bitcoin was that it actually worked. there had been several attempts to try and address this issue in the past. Mark Andreessen, the inventor of the web browser, said that the cardinal sin of the internet was that money was not natively programmed into the web. Bill Gates wrote a book in the 1990s where he talked about the need for a form of digital money and wallets. The book, The Sovereign Individual, which is a book that's widely read by people in the Bitcoin space and in the technology industry generally, talked at great length about the need for a form of digital decentralized money that was separate from governments and was native to the internet. Elon Musk, the first example of the precursor to PayPal, X.com, originally started as an idea for creating digital money. So this is an idea whose time had finally come, and an idea that was made possible by this innovation. Bitcoin is based on a technology stack of lots of different really important developments, but the introduction of this blockchain, this decentralized ledger of transactions that everyone can access and everyone can trust, but no single entity can alter. The only way it can be changed is by the whole network reaching consensus. That was the thing. That was the thing that took what was a really great idea and made it real. So this was the thing, this was the idea that we put into place in that first paper, and we built on this, that now the internet was going from an internet of information to an internet of value. And the thinking was the underlying technology of the blockchain, if it works for Bitcoin, it could work for many other kinds of assets. That at the time, you may recall, 2013, 14, there was no Ethereum, really. There was no other network. The thinking was, look, you've got these Bitcoin transactions. Why can't you record ownership of property? Why can't you do marriage licenses and titles? Why can't you do transactions in securities and financial assets? Why can't you move titles and deeds? Why can't you do this? Like, the idea was you could program that blockchain to represent both Bitcoin, but also anything of value. And this was something that really stuck out to me. And it was really well articulated I think, in that paper, but also by a really well-known op-ed at the time written by Mark Andreessen called Why Bitcoin Matters. I don't know if you ever remember reading that, but I remember reading that op-ed, and it was a New York Times op-ed. New York Times, 2014, Mark Andreessen writes this thing, and it was brilliant and mostly correct, not entirely correct, but mostly correct about where we would be heading. So anyway, that was the first major research initiative that I undertook. At the time, you could interview like anybody you wanted. I remember interviewing Balaji, I interviewed like Jeremy Allaire, I interviewed Bill Barhydt, I interviewed like anybody who was doing anything in crypto at the time was eager to talk to anybody writing about this topic. And that research eventually became the basis for a book proposal. So my dad's publisher, you mentioned my dad as an author, my dad's publisher had expressed some interest in what Don was working on. And his agent said, Bitcoin, blockchain, this seems like a hot topic. No one's written a book that's very accessible for a mainstream audience. I actually think at the time nobody had written a book, period. Like the Bitcoin standard was like years later. So he's like, what do you think of writing a book about Bitcoin and blockchain? And by the way, the fact that you're working with Alex on this is a feature. We think this is cool, like this father-son dynamic. Would the two of you want to write a book together? So my dad came to me and I said, wow, that sounds like a cool opportunity. So we put together a proposal. A book proposal is kind of like a annotated table of contents, maybe 25 pages long, 10,000 words. A book is about 100,000 words, so about 10% of the length of a book. And took it to the publisher of Wikonomics, which was Penguin Random House. They loved it. They said, we want it, don't shop it around. They gave us a big advance and they said, go write the book. So then I was left with this choice. I had a job. I was still working on Bay Street. I was still commuting to New York every single week. My firm had rented me an apartment in the city where I was like, that was my outpost where I was doing all this business. But I had this opportunity to do something like totally different. And it didn't really take, honestly, that much convincing. There's a quote, like if someone offers you a seat on a rocket ship, you don't ask which seat, you just get on the rocket.
Yeah.
And so I figured, you know what? I was 28 at the time, married, but no kids, no giant like mortgage or anything like weighing on me. And I was like, to hell with it. I will do this. This will be fun. Worst case scenario, I end up back doing something similar to what I was doing before. Best case scenario, this allows me to pursue this thing I love and to like see where it takes me, right? So 2015, I resigned. I spent a year earning no salary with my dad writing this book, and that book, Blockchain Revolution, came out in the spring of 2016. Now they say that luck is the combination of preparation and good timing. So we'd written this book. I think it was a great book. We interviewed you for that book, Sonny. You may remember, and along with 100 other people. And that book was released right at the time when the first wave of people beyond outside of crypto was starting to like take an interest in this. So it ended up going on to be, a huge best-selling book. It spent, I think, 2 months on the bestseller list here in Canada. As I said, it was translated into 21 different languages and set me personally on the trajectory that I'd hoped for, which was something totally new, where I would be able to like pursue this and explore my interests and have fun doing it. So I'll pause there.
What a beautiful story. I love that. I love that. And I love how you started it with, such humble beginnings. You didn't know an asset from a hole in the wall. You had a job like many of us. I'm curious, what was your worldview when it came to, let's say, financial institutions, centralized systems? Did you have much of a worldview around that? Was it more like leaning towards Keynesianism due to the fact that, you're a banker essentially living in a world as such? But I'm just curious, like, and to then be able to shift gears and embrace something that was, kind of this weird Austrian economics principle. I mean, there's a lot of things that rub, traditional bankers the wrong way when it comes to Bitcoin. I mean, now you could argue it's hitting the escape velocity, but how were you able to juxtapose these two worlds so early in the game?
Well, I think you're giving people who work in finance a lot of credit. that they have some sort of like intellectual worldview that's anchored in like famous dead economists. Like I don't think like I think they go to work, they try to make as much money as they can. That's about it.
Okay.
Like, I think like if you're the CEO of JP Morgan and you're, an institutionalist and you have this massive business to protect and something comes along that threatens the status quo, then I can see how you might react in a potentially sort of defensive way. For me at the time, our business, like one of the business that I was in was not like some big commercial bank that was like, acting as an intermediary in like the flow of funds, and was poised to be disrupted by this. It was a company that primarily helped entrepreneurs raise growth capital from institutional investors. So from that point of view, I was just thinking like, this is a new technology. This is an exciting area. There's going to be tons of new capital formation. There's going to be new companies created. This will be a cool area to get educated on. This is back when I was in my seat at the bank, and it could be this could be a big opportunity for us, not some kind of a risk. So like that was the thinking from the point of view of my job. From a more philosophical point of view, like I don't think like I'm not, I probably got interested in Hayek and Milton Friedman and read up on Keynes as well, more after the fact, right? It was like, so once you start spending time on, you get interested in Bitcoin, you're like, well, what is the actual intellectual debate that is happening here? Like,
Hmm.
what does this represent? To me, it was the use case of Bitcoin as as a way to create self sovereignty and to allow people to be their own bank and to store value in something that was not controlled by a central bank. To me, that was an interesting part of this story, but it wasn't the only interesting part of it. To me, honestly, what was most interesting was the idea of this thing acting as a medium for value that could transform industries in a way that was as great or greater than the first era of the internet. The idea that even though the internet changed how we consume content, it changed media, it changed the communications industry. Did it have a big impact on banking? Not particularly, right? We still had to rely on intermediaries to establish trust, to prove identities, to perform all the business logic that goes into commerce, both online and offline. And intermediaries, capture a lot of value, slow things down. They also absorb your data because you have to share information about yourself to interact with them. And they use that data for their own benefit. And so like these are all things that I saw as limitations, negatives, maybe not in like a deeply philosophical way, but just as a practical way. Like why does it cost less to like FedEx and Anvil to the Philippines than it does to send a remittance, right? And that's why Sunny, what you guys were working on back in the day, was so appealing to me, more on a moral level, which is that this is a medium that can allow anyone anywhere in the world to move and store and manage their wealth and do financial transactions without the need for an intermediary. That will empower people in a way that no other technology has in the past, right? And so to me, that was the driving sort of ethical, philosophical force that led us in our early pursuit of the topic. Another example of that, by the way, is land titles. There was a thinking that blockchains are these decentralized, immutable ledgers of ownership. And right now, most people in the world, in India, when you go to visit, or Latin America, most people who own land don't actually have a title that's enforceable because there might be a duplicate title, or there might be, a triplicate title, or there might be disputed title, or whatever it is. And then you have to rely on an authority to enforce that. Now, a blockchain can't do the enforcement mechanism, but it can provide the truthful record of, ownership of assets. And that's true for Bitcoin. It's true for, NFTs and ordinals. It's true for other crypto assets and RWAs, and it can be true for, land and property titles as well. So it was this idea that, Bitcoin and blockchains could help to solve this prosperity paradox in the world. And create a more tightly knit, more flat Earth economically, that really appealed to me from a philosophical point of view.
Yeah, Alex, did you back in those days, did you think Bitcoin would reach the levels it has today? There was always this kind of tension between Bitcoin versus blockchain, right? Everybody would
Yeah.
be like, the banks even, oh, blockchain is amazing. Bitcoin, devil's money type of thing, right? So were you able to see through some of that noise early on, or do you think you kind of fell into that as well, as in like maybe there's a period where you didn't maybe see the light with Bitcoin? And
Well,
yeah, and how was your kind of view of Bitcoin changed over the years?
well, my point of view is it's not blockchain, not Bitcoin. It's just like Bitcoin and blockchain. Like
Mm,
I mean, like look at Bitcoin is 61%
yes,
of all
yes.
assets. It is the mother of all chains, the mother of all coins. It's held by individuals, institutions, governments, central banks. It is promoted by heads of state, and it is the technology that launched 1,000 chains and 1,000 innovations. But to me, Bitcoin is not the be all and end all, right? So I mean, maybe there are people who believe that, who listen to this show, but I think that there's tons of value and utility, tons, to all of the not all of the other chains, but many of the other chains and many of the other technologies. I think, in fact, I'll take you back to 2013, 14, because this is something I've written about a lot. Back then, the belief was that Bitcoin would be the canonical blockchain, meaning Bitcoin would be used for moving and storing Bitcoin, but any other innovation that people had in mind for using this network as a way to secure transactions and other digital goods would all happen on the Bitcoin network. And there was a philosophical debate within the community about, block size, should we go big block size, small block size? And like, not to oversimplify, but basically the direction that the most powerful stakeholders in the Bitcoin world chose was one that focused really on Bitcoin as a store of value asset, as a super secure form of, digital money
Mm.
that allowed individuals to, own, hold, hodl, and build wealth in the long term. And that, I mean, look, from a purely financial point of view, that seems to have worked out. Bitcoin today is certainly a lot more valuable than it was back then. But I do think that they ceded an opportunity to Ethereum and some of these other chains to do a lot more experimentation and exploration. Now, Ethereum today is not considered hard money, and the token value is under question for lots of different reasons, right? But like, it's undeniable that the innovation in DeFi, in cultural assets, in all sorts of decentralized applications, um, is all has mostly happened on other networks other than Bitcoin. But as I said, there's nothing so powerful as an idea whose time has come again. And I guess that's the thing that really has me excited about Bitcoin now, which is that in the last couple of years, there's been this renaissance. And I call it a renaissance because this was the original idea, 2013, 14, which is that we can use this network as a way to program value and to create new kinds of assets and marketplaces and companies and all sorts of things. And we're starting to see that again. There's the layer two thesis on Bitcoin, there's the ordinals and NFT thesis on Bitcoin. And the idea that, yeah, if you're going to do transactions in RWAs, or if you're going to, try and build something new, why not build it on the largest, most secure, most battle tested network in the world, right? The Bitcoin network is, I think, the most unhackable system that's ever been invented. I think. I don't want, you never know. You never want to say something's unhackable because, it'll get hacked the next day. But basically, like, you would have the amount of computing power that you would need to marshal to conduct a 51% attack on the network is higher than any other bar, I think, in the computing industry. And that's different from, proof of stake networks, where they're also decentralized and they're also secure. But, by gathering delegated stake to your nodes, you might be able to like grab like a bigger share of the pie, right? So I think that the proof of work system, for its flaws, and it does have some flaws, is one where security is all but guaranteed. So anyway, going back to what I was saying, so in the last couple of years, there's been this, Cambrian explosion, not to overuse that term, of all these sorts of new ideas and new assets launching on Bitcoin. And Sunny, I think I've shared this analysis with you, but like if you look at the value of Ethereum, the market cap, and then let's say it's like $250 billion or 200 whatever, and then you look at the value of all of the assets on top, the layer two networks, the NFTs, the decentralized applications, the DeFi protocols, and so forth. The ratio, I think, is about like 3 to 1. So like there's maybe 70 to 80 billion dollars of value in the stuff built on top of Ethereum, and there's 250 billion of Ethereum value, right? So Ethereum has been effective at creating value on top of the platform. And you could arguably say, well, also look at stablecoins. Half of all stablecoin values settle on the Ethereum network, and that's $125 billion. So if you want to include the RWAs, it's even bigger than that. But basically, there's this value that's been created. If you look at Bitcoin, the cumulative value of all the Bitcoin layer two assets, ordinals and so forth, I'm not sure what the number is now. The last time I checked, it was about 10 to $15 billion. So that compares to like whatever, 1.6 trillion dollars for Bitcoin. So the value of what's built on Bitcoin is still very tiny. Now, what's interesting to me is like, what is going to happen there? Are we going to see the ecosystem that's this nascent new ecosystem on Bitcoin grow so that it ends up roughly where that's worth about a third of the underlying platform? If that's true, then up here on the stuff building on Bitcoin, like your show's called Building on Bitcoin, the stuff that's being built on Bitcoin could be one of like the most exciting wealth creation events in the technology industry in the next few years. Because what it means in effect is that hundreds of billions of dollars of value is going to start to settle on the network. And that will mean lots of applications and new protocols built on Bitcoin could grow to significant size as a result. So we're not there yet. Like it still feels very early. I kind of love to get your point of view on this because you're much closer to this than I am. But to me, like that is like a humongous opportunity in the Bitcoin space.
I agree 100%. Alex, you and I were fortunate enough to have a front row seat to the birth of Ethereum, right? Like we're both from
Yeah.
Toronto. Like Vitalik is someone that we've all been, acquaintances, friends with. Where did they go wrong, right? They had the world computer narrative, they had the Turing completeness, they had the programmable nature of blockchains kind of nailed. In your view, if you had to kind of point to two or three bullet points, why are we not on this podcast talking about building on Ethereum right now?
Well, that's my next show. I'm going on to talk about building on Ethereum. No,
Oh.
but I mean, like, I don't think so. First of all, we're so early, like, I don't think Ethereum has gone wrong. I think that it's a lot more complicated than that. So what is Ethereum? Ethereum is the first like general purpose blockchain, a programmable blockchain that allowed you to launch other assets using different token standards and to build applications on top of the network. Actually, that was one of the big things that excited us about this technology. And I was with Joe Lubin, the CEO of Consensus, Joe, one of the founders of Ethereum, in their offices in Brooklyn in August of 2015 when the Genesis block of Ethereum got mined. And the office was about as big as my office here, like literally, maybe even smaller. It was me, Joe, my dad, our editor, and two other Consensus employees. That's all that could fit, and two people had to stand. And we were there for the Ethereum Genesis block getting mined. And that felt like, being present at the creation of something kind of important. We didn't know what it was going to be or how important, but something important. And Ethereum has been very successful. Like there would not be stable coins, there would not be DeFi, there would not be any NFTs without Ethereum, I think. That was the platform where a lot of that really messy early experimentation happened. And it's where a lot of value did get created and a lot of innovation occurred. So I love Ethereum. I don't know about this. I'm not talking about it as an asset that I'd want to invest in right now. I'm not sure if it's a good investment right now. But I love Ethereum and everything that it created. And I'm also very proud of it in a way because of its Canadian roots. Several of the co-founders of Ethereum came from our town, Toronto, and many of them still reside here. And I think that Toronto, to the extent that it has a big burgeoning crypto ecosystem, and it's decent. It's not New York or some of these other places, is because of the knock-on effects of that creation event. So to me, that's was something that I think has to be said about Ethereum. I think right now the big debate in the Ethereum ecosystem is that they kind of shot themselves in the foot with the L2 scaling solution. So right now, the Ethereum main chain actually doesn't really receive that much of the fee revenue that's generated from transactions that are happening within the Ethereum ecosystem. So, the Ethereum ecosystem is like mostly now like layer 2 networks where a lot of small dollar value transactions are happening with cheap fees and where a lot of the fee revenue is being captured. The main chain is not really benefiting from that much. That's sort of point number one. Point number two is that, Ethereum and Solana kind of have to operate. Well, I would say there's a lot of benefits to them operating more like businesses. Like Bitcoin does not operate like a business. Bitcoin is something that is, frankly, more intellectually pure. But when it comes to Ethereum and Solana, these things, like, you need to be able to push new updates. You need to be able to market your software compared to others. You need to court businesses and developers to build on your network. You need to, have clear, consistent communications. You need to have a central you need to have sort of like a central point of coordination to help to steward this ecosystem. And we used to say that just because you're decentralized doesn't mean you have to be disorganized, but that's sort of the issue that Ethereum is dealing with right now. It's decentralized and it's disorganized, and I worry that it's soon going to become dysfunctional. So I think that there needs to be a shift. And I think that Ethereum does need to think of itself more some sort of decentralized thing that has no central point of coordination. And one thing I will add too to this, which is that, coordination is not a bad thing. We're not talking about like a top-down hierarchy with CEO and management and different divisions. If you look at other global resources, technology resources, and how they are stewarded, like the internet itself is a public good, but it is not without some leadership. There is the Internet Engineering Task Force, there's ICANN, there are all these different groups that actually work full time to push updates and to maintain key core like open source technology. And like they have organizational structures and they have teams of people that work on certain issues. So it's not unusual for that to be the case. The Linux Foundation, like and Linus Torvalds and the open source world, yes, it's open source, but there's also lots of input. So to me, Ethereum is at this like very critical crossroads where it needs to kind of figure out what it wants to be when it grows up. Zooming out, in terms of the demand for ETH for sort of a state on the Ethereum network, generally, I think like we're going to be in another crypto bull market at some point soon. When that happens, there's going to be like an insatiable demand for block space. There's going to be tons of experimentation and new company formation, new app formation, and it's going to happen on Bitcoin and Ethereum and Solana. It's going to happen on a lot of these different networks. And so I think that many of these networks can benefit at the same time. And that's another thing I'll add, which is that one criticism I have of Bitcoin maximalists is that and ETH maximalists, and actually anyone who's a chain maximalist, is that they sort of view this as kind of zero sum. And I think that there's some truth to that in that a developer may be choosing between building on Solana or Ethereum when they're trying to launch some new application, right? And if they build on Solana, that means it's not built on Ethereum. Um, but the bigger picture is that the pie itself is going to grow. That we're so early in the development of this technology and its utility and how it's used, that all can benefit if they focus on like a niche is the wrong word, but if they develop a reason for why people should build with them, right? So to me, like, this is the way to think about this, is not like Bitcoin benefits and Ethereum loses or vice versa. Everything can benefit together. And you look no further than the fact that, like, when I first started looking into Bitcoin, it was like $8 billion of market cap. Like, at the time, it would have barely cracked the S&P 500. Like Under Armour was a bigger company than Bitcoin was by market value. And now it's worth over $1 trillion. In that same period, the Web3 sort of explosion has occurred, and all these other protocols and assets have done very well. So everyone can do well together, is my point, especially when they do different kinds of things.
Nicely said. So you asked me for my opinion. I'm going to hold on to that one and maybe address it on a Friday rant that I'm going to start doing. I just want to keep the focus on you. But I think you summed it up really nicely. And it's not just Ethereum, right? AI was also, I think, born in our backyard. I mean, if you look at Jeffrey Hinton and kind of the new renaissance that's taking place, it roots back to Toronto as well. So I think there's definitely something in the water, something in the air where we live here. So exciting. Hey, listen, I know we don't have too
But,
much. We have about, oh, sorry, Alex, what was
I
that?
just want to say, like, Toronto has world-class universities. It's a big city. It is the country's center for finance and for media. It's got lots of public institutions that do really important research. And Toronto is one of the most welcoming places, if not the most welcoming places in the world, for people
I,
from all over the place. And
I
that
just I just came up with a
ties in.
question that I want to ask you on this note. Like
Yeah, go
you
ahead.
are in, I mean, you have this really interesting kind of worldview because here you are, this author, right? Always kind of pushing the border of like what's possible, getting people to expand their minds. But then you're also you work with Ninepoint and Canaccord, and you're kind of deep in capital formation and helping entrepreneurs get to market. Why is it that despite Ethereum being born here, despite Jeffrey Hinton and Ilya Sutskever, that Canada as a country is unable to capture that value? I think you wrote an article about this recently as well, right? How Canada could be like the most kind of wealthiest nation. Can you touch on that a little bit?
Yeah. So, Canada, as I said, has many strengths. We've got great public institutions, great universities. We're welcoming to people from all around the world. We've a stable system of government, rule of law. This is a market economy, despite what listen to on Fox News. This is not a communist country. But there are lots of areas where we can be doing, a lot better. And one of the issues is that, in Canada, Canada on average invests about 57 cents for every dollar that the US invests in R&D and into capital investments, right? So just generally, we're not investing enough into our economy. As a result, our level of competitiveness and productivity ranks towards the bottom of our peer group. Now, we have a pretty lofty peer group, but still, like, amongst OECD or G8 countries, we can be doing a lot better. Another thing is that we have a venture capital market that today is smaller, much smaller per capita than it is in the United States, and often the back end of that is government money. There's often government money, and with that, there are strings attached. So, like, a lot of VC firms won't touch crypto because back behind the scenes, there's a government or a bank or a pension fund that's saying no, 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 no. So what we need more of is private capital from people who just want to support entrepreneurs and just want to make money, right? Like, that's something that the US has that we do not have. And it's not like Germany has it. Like, the US is unique, pretty unique in the world for having this. Part of it comes from having founders who've made money who want to, like, share the love, like recycle that into the ecosystem. So how do you create the conditions for more people to want to invest into what are in effect speculative investments, right? Like, anything venture stage or early stage is fairly speculative. One idea that I proposed in that op-ed for the National Post, which is one of Canada's national newspapers, was that we should expand a program called the Flow Through Share program to include technology companies. So what is a flow through share? Basically, what it means is that you as an investor can invest into a mining company or an oil and gas company and receive a 100% tax write-off as a result. Why does this exist? Because Canada as a country, when it was introduced, had a lot of undeveloped and underexplored land. We knew there were resources there, we just didn't know where or how to get them out. So we created a program to incentivize mining companies to put shovels in the ground and start doing exploration work. So today we live in a knowledge economy. Commodities are important and industrial industries are obviously very important, but there's a much deeper well in Canada of human capital and talent than there is of physical resources. You know, human talent and technology are boundless, whereas resources are inherently finite. So what I argued for is like, why not create a tax advantaged way for individuals to invest into Canadian tech companies, just like we already do this with mining companies. And what was really interesting is that that idea seems to have really caught on. The Canadian finance minister retweeted my tweet and summarized some of the key points. And then, interestingly, last week the Liberals put out their
Wow.
party put out their party platform, and one of the main parts of their innovation program was expanding flow through shares for innovation industries.
Oh, wow. Okay.
I don't know if someone read my op-ed and that changed the platform, but
Cool.
there are a lot of really great people out there advocating. There's a group in Ottawa that's advocating for flow-through shares. This is something that Aaron O'Toole, the former conservative leader, this was part of his platform when he was running for prime minister. So this is not a novel idea. I by the way, first started talking about this in 2017. But it's, you know, one of these ideas maybe whose time has come. And so what could this mean? Well, and I know we're focusing on something that seems a little arcane, but it's really important. You know, every single year, up to $1 billion of capital is raised through the flow-through share process for mining and mining companies primarily. And in good years, it's even more because there's more exploration happening. The Canadian venture capital market is like, you know, $2 billion in size. So if you imagine not a zero-sum thing where tech takes from mining, but where tech grows the pie, if there's $500 million or $1 billion of new capital being formed for tech startups through this system, it could mean a 30-50% increase to the entire size of the VC market. Think what all those companies and startups could do in the AI and the quantum space, blockchain, all this stuff, if they had access to that kind of a capital. And the best part is that capital just comes from individuals who are looking to either save some money on tax, but also support entrepreneurs who are doing cool stuff versus like, you know, coming from some like central brain trust with like a bureaucrat who's saying, you know, this putting their finger on the scale saying we support quantum, but we don't support crypto. This could be a way to democratize how capital gets formed so that it forms in the places where it's best suited, where there's the best and most likely possible return.
Awesome. Awesome. Hey, Alex, you know, when we met, I think you said 2014, 2015. Again, we were just a bunch of young guys talking about this crazy tech. Most people would laugh us out of the room. You know, I mean, I don't know about you, well, maybe not in your case, but in my case, you get uninvited from, you know, dinner parties, and it's like, oh God, that guy, that's the guy that talks about Bitcoin 24/7. Um, and then here we are today, BlackRocks of the world with ETFs, the most successful stocks, MetaPlanet, MicroStrategy adopting Bitcoin standard. And then, not to mention the most powerful country on earth, our neighbor, suggesting that they're going to hold Bitcoin on their strategic reserve as a strategic reserve asset. WTF? Like,
Hey, like
what is going on? Like, is this real life? Like that, you know, that YouTube?
I know it's
Like,
like
what
if
is going on?
you weren't
Like,
bullish enough. If you had said, you know, Bitcoin was going to, you know, back when Bitcoin was what, $500 or 800. I'm trying to
yeah,
think when I first sort of looked into it, um, and got interested in it, that it would be $50,000. You know, I would have said, wow, that's amazing. But I would have never, but I thought it was possible. But what I never thought was possible, really, was like the vibes, like the fact that, like, to your point, the biggest asset manager in the world, many of the you know, political leadership in the US and the president, the White House, and everything else would be talking about it the way that they have. Even if you'd asked me that 4 years ago, I would have been shocked. Let's not forget that Donald Trump wanted to ban Bitcoin. He like, and it's not really surprising why. This is the guy who thinks like, the US dollar is under threat and America is always being attacked. And here comes this thing and it's trying to make the US weaker. Like, that sounds like something that we should ban. But it was probably all he thought of. That was the extent of his thinking. And fortunately, they didn't at the time. And now all of a sudden, it's something that's being embraced. So, people try to predict the future. I think the future is not something to be predicted. It's something to be achieved. And that's why I always encourage people, like, if you want to, a future that your kids can live in, that's going to be fair, more bountiful, then try and go build it yourself. But also, the future is going to be a lot weirder than you expect. And I think that's something that people don't really get, right? It's like, the internet. The internet, this is a new medium for information. It's a new publishing medium. We should put like newspapers and magazines and the yellow pages on the web. Yeah, okay, we did that. But that's like a very, what they call, kind of skeuomorphic version of how technology develops. You think that the new thing will resemble the old thing, but actually the new thing usually creates something kind of new and totally bizarre, right? Like social media, cloud computing, and eventually crypto. There's no crypto without the web, right? So like, that's something that wasn't certainly predicted in 1992, 1993. So the kinds of things that people are predicting now, that we can use blockchains as a way to, move and store value and securities and other real world assets, for sure. Yeah, it's a medium for value. It should be able to, we can use it to move and store assets, but it's going to lead to all sorts of other stranger and more unexpected consequences, right? Changes in the role of government in society, where power resides, and so forth. So I'm not going to pretend I know. I don't have a crystal ball, but I can guarantee you that any prediction that you have you're not bullish enough, and you're not being imaginative enough, because the future is going to be very strange and hopefully very fun.
Amazing interview, Alex. I had like 20 more questions, so maybe we do a follow-up down the line when you've got some time.
Yeah, man. I'd
Maybe
love
help me
to.
land the plane here, and I'll give you a couple minutes back to your day here. Tell us about Twitter,
Oh,
the book Web3, which I
I
started
thought I
off
just
with.
landed the plane beautifully there.
That was perfect. But I want to make sure people can
Twitter,
learn more
Twitter
about
at
you.
Alex, Twitter at Alex Tapscott, or Twitter X at Alex Tapscott. That's good place to start. I also post a lot on LinkedIn, and we also have the DeFi Decoded podcast, which every week we interview a founder, venture capitalist, policymaker, influencer in the crypto space, sometimes AI and other technologies, but really very focused on crypto and Bitcoin. Check it out. It's a terrific show. And Sunny, you should come on sometime.
I will. Awesome, man. Sounds good. Let's bring this one to a close, and thank you everyone for listening.